Hi there, and welcome back to the Metaverse Stock Exchange. It is a huge earnings day today with the three big A's reporting. That is Amazon, Apple, and Alphabet, the parent company of Google. So, huge earnings mover, huge market mover, and setting up expectations for the next quarter and the next year. With all that being said, let's see what we are expecting. First, I'm going to pull up Amazon here because I'm the most bullish on these earnings. Why? We are expecting a 17 cents earnings per share with $155 billion in revenues. Now that compared to last year's December quarter, we're going to see that we have $137 billion in revenue. So we're expecting around $8 billion more in revenue. And then the earnings per share number is a little bit off because $27 is, if you didn't know, in 2022, Amazon stock did split. So we have to do the math on a split adjusted basis. I have my whiteboard here all set up. So for Amazon, last year they earned 139. That is adjusted for the stock split. So this 27 is really 139. So we are comparing the 17 cents to the 139 number. With that being said, so we are expecting more revenues. Why are we expecting such a drop off in earnings? With all of the cost-cutting measures that have been happening, Amazon laid off a lot of workers, and pretty much all companies have been very kind of thinking about their stock prices and cutting costs because that's what the market wants. And plus, this being the biggest and most important quarter for Amazon in the year, that's why we are comparing a December quarter to a December quarter. Comparing a December quarter to last quarter, which is the September quarter, it's not really accurate because, as you all know, you shop the most during the holidays, and that's why the December quarter is the biggest earnings kind of driver and revenue driver for Amazon. With all of that being said, since even the earnings expectations are for higher revenues and just the $17 earnings, I really believe that this number will be beat by a wide margin because what is the biggest earnings generator for Amazon? That is their cloud division. Microsoft reported last week in their Azure cloud division, which is pretty much the competitor to Amazon Cloud, was in line with expectations. It grew by 32%. So we're expecting Amazon Cloud to grow by a good amount as well. And I do believe that earnings at Amazon will be much bigger than the 17 cents. Now keep in mind that Amazon stock has rallied into the print. Plus, it's up another 4% this morning because Meta reported yesterday, and because it had such a good quarter, now Amazon is up around 4% in the pre-market, kind of expecting because pretty much the expectations were super low. That's why I'm pointing this out. I think that the market is adjusting. We had a 2% move yesterday, another 4% today in the pre-market. So it run up in the earnings, but definitely my thoughts, at least, it is that it will beat. How the stock will respond, we'll see, because it did kind of drive up a little bit, especially in January and especially in the last couple of days. So my guess, Amazon is definitely beating on the earnings front. The revenues probably in line, but earnings, I really see a beat on those 17 cents. That being said, let's move that screen and get our Alphabet screen in front of us. Okay, Alphabet, similar story. We have on stock split last year, so I have my whiteboard for that as well. So let's see what we're expecting. We are expecting today a $1.18 earnings and $76 billion in revenue. Compared that to last year's December quarter, $72 billion in revenue. So pretty much a 5% uptick in revenues. But last year they had an earnings per share of, let's see, 153. So this number by the stock split is 153, whereas right now we're expecting 118, which is pretty much kind of a little bit in line with, let's say, the March quarter and the September quarter. So expectations for Google for earnings, at least, are not really big. What worries me is these three kind of red marks right there and right there. That means that the last 3 quarters, Google or Alphabet has been missing on expectations. As you can see, they missed on earnings and revenues, earnings, revenues, earnings, revenues. Before that, they have a really nice kind of streak there of beating expectations, but last three times, I believe because expectations were set super, super high. Now let's see what we can learn from Meta, because as you know, a lot of the earnings for Google or Alphabet come from advertising, and Meta's advertising was really, really on par. Also, Snapchat before that was really on par. So even though we are seeing a slowdown in the advertising, it's still pretty good for the big players, at least like Meta and hopefully Google. Now we have to understand where are the expectations. 76 billion, maybe they can miss there. I'm not sure because Meta did beat on revenues, so we could see a miss. Again, if they weren't missing for the last three times, I would be a lot more bullish on this stock. But because they are kind of now on a track record of missing in 118 compared to 153, again, that's a earnings decline from last year's kind of report. So it is in line with what I'm expecting. So it will be close. I can't say whether I'm a definitive beat or a miss, but it will be pretty close with the earnings and revenue. Now, when we pair that up with a 2% move yesterday, with another 4% move again in the pre-market, and that's pretty much the Meta effect, very similar like Amazon. Both stocks are up more than 4% in the pre-market because now expectations for both Amazon and Alphabet are that they're going to have really, really strong quarters. The stock has run up. So I think that expectations here, earnings and revenues should be along, let's say, in line. Maybe a miss or a beat, very, very light. I don't see, like Amazon, I see a pretty big beat there. Here, I'm not seeing a huge move. And because the stock has moved so much into the print, it can be a mixed picture. So I can't give a forecast for that, but I think if I'm going to be bullish on Amazon, I'm going to say mixed picture on Apple. On Alphabet. And then I'm going to go to Apple in a sneak preview. I'm going to be bearish on that. So that's going to be my kind of bullish Amazon, neutral on Alphabet. And then let's go and check Apple. Let's get this screen out of the way. Let's unpin that. I don't need that screen. And let's move this screen for me here. Perfect, hopefully. And then I'm doing this so you can see better, because in virtual reality, screens from above, from kind of further distance, the resolution is not too par, at least not of right now. Hopefully it will get better in the future. So with Apple, let's see what we're expecting from Apple. Apple, we're expecting $1.94 with revenues of $121 billion. Now again, going comparable quarter, this is the quarter for them last year, December, that was $2.10 with $119 billion in revenues. So the revenues pretty much equal just $2 billion difference. That's not a big difference there, but we are expecting, at least the market is expecting, a 10% kind of drop off from $2.10 to $1.94 in earnings. Now again, here, why am I being conflicted? Apple has had so many problems with its supply chain. We know that they produced less iPhones than they were projecting earlier in the year. They said so. So we know sales, maybe sales are good. We're going to see what sales are, but definitely production has been very hard, and there have been a lot of problems in China because of the COVID lockdowns and everything else. At the same time, they have been selling a lot more Pro models, which are more expensive and kind of generating more revenue. But even with all of that, Apple stock is trading just less than 20% from its all-time high, far higher than what Amazon or Meta or Alphabet are trading. So Apple stock has been very high for a very long time. It is very stable, and one of the reasons is all of this green here. So only this revenue miss here, which is very light revenue miss. Why am I pointing that out? Because Apple has a long track record of beating on earnings expectations. As you can see here, for the last 2 years, straight beats on earnings. So for me to say that I believe that they're going to miss here, it's a stretch, but I do believe that this is the first time in a long time that Apple is going to miss on its earnings. And because it has this track record, that could severely impact the stock because it's at a very high premium. As I said, only 20% from its all-time high, even less than that. It's not moving so much in the pre-market. Yesterday, it only had less than a percent move. So expectations are, investors are weary. They know that they're not expecting a brilliant quarter, but I really am expecting a pretty bad quarter. And I think that this can be a market mover to the downside. Again, have to point out that Apple has a very long track record of beats, and they are pretty much the number one company in the world. But these expectations with all the problems they had this year, to be expecting just even a revenue increase by 2 billion, again, I really don't believe that. I think it's going to be a miss on the top and on the bottom line. And I think that the stock could react very negatively to that. We'll see. As I said, Apple does hold its price, but definitely that's my prediction. So my prediction is that Amazon is going to beat Alphabet, is going to be a here and there quarter, and then a miss on Apple. We're going to see what happens, and we're going to see how the stocks react, but it will be definitely a huge market moving event. Thank you so much, and see you in the next video.